I challenge you to rethink everything you know about property investment. Australia's wealthiest individuals are playing by a different set of rules, and I'm about to reveal them. In the next few minutes, I want to take you inside the minds of Australia's 1% Club and reveal their unconventional approach to property investment that's setting them up for massive gains in 2024. Australia's 1% Club, a group of over 15,000 high net worth and ultra high net worth individuals, have mastered the art of property investment to build and maintain their substantial wealth. Their secret? Strategic investments in commercial real estate and prime residential properties. But how exactly have these strategies fueled their incredible wealth? And more importantly, can everyday investors like you and me benefit from their approach? I've spent time poring through and learning investment habits of Australia's wealthy elite, and today I'm going to share their key insights with you. Australia's high net worth individuals and ultra high net worth individuals have long recognised the value of property investment in building and maintaining their wealth. In fact, when we look at the long-term trends in their investment allocations, a clear pattern emerges. The wealthy typically prefer to keep at least 30% of their investments in property, whether that's residential or commercial or even REITs. This might seem like a significant chunk of their portfolios, but there's a good reason for it. Property has consistently proven to be a reliable and lucrative investment vehicle for the 1% Club. But just how committed are they to property investment? Well, according to recent data, 41% of ultra high net worth individuals are planning to purchase either a home or a commercial property this year alone. This level of investment activity speaks volumes about the confidence of the wealthy have in the property market. Because when you really think about it, the wealthy have always a knack for seeing opportunities where others see obstacles. They don't let temporary setbacks or changing conditions deter them from their long-term investment strategies. You know, it's funny. Whenever I talk to people about the property market, they always bring up the pandemic and how it's changed everything, with remote work and online shopping becoming the new norm. And sure, those things have had an impact. But here's the thing. The wealthy, they haven't let that scare them away from investing in real estate. It makes you wonder, right? What is it about property that keeps them coming back, no matter what's going on in the world? Well, I've given this a lot of thought and I think it boils down to a few key things. For starters, property investment tends to offer really stable returns. And if there's one thing the wealthy love, it's a reliable source of growth of their money. They want something they can count on, year after year, and that's exactly what real estate provides. But it's not just about stability. Property investments also give the wealthy a way to protect themselves against inflation. Think about it. As prices go up over time, so do the property values and the rent they can charge. It's like a built-in safety net that helps them maintain their purchasing power no matter what happens in the economy. And of course, there are tax benefits that come with property investments. The 1% Club can take advantage of things like depreciation deductions and capital gains tax discounts, which can make a big difference in the overall wealth building strategy. So when you put all of those things together, the stable returns, the inflation hedge, and the tax benefits, it's easy to see why the wealthy keep coming back to property, even when times get tough. It just makes a lot of sense for their financial goals. Now, let's talk about how property investment preferences of the wealthy have changed over the years. It's not like they've been investing in the same old things forever, right? I've noticed some really interesting shifts recently, especially when it comes to the types of properties they are targeting. Back in the day, it seemed like residential properties were the go-to choice for many wealthy investors. But fast forward to 2023 and suddenly commercial real estate is stealing the spotlight, specifically office buildings, industrial sites, and logistics centres. And it just makes sense when you think about it. These types of properties can offer pretty impressive returns and they've been seeing solid rental growth across most of the global markets. But here's the fascinating part. Even though the overall investment in commercial real estate took a bit of a hit in 2023, the wealthy didn't seem to get the memo. While institutional and public capital saw a pretty steep drop of around 53%, investment from high net worth individuals only dipped around 19%. That's a big difference. It just goes to show that the 1% Club are playing the long game. They're holding on to big chunks of their portfolios, waiting for the right moment to pounce on those prime commercial assets. And with their deep pockets, it's easy to access equity and they're in a great position to capitalize on the expected recovery in 2024. Oh, and one more thing. Have you noticed how retail properties seem to be falling out of favor with the wealthy? I sure have. It looks like only a tiny fraction of them, like 3%, are even interested in retail assets going into 2024. Another thing that really stands out to me about the wealthy is their ability to pivot their investment strategies based on the changing market conditions. They don't just stick to a rigid plan. They're constantly adapting and evolving. Take a look what happened during the global financial crisis and the COVID-19 pandemic. In both of those situations, we saw a significant shift in the way private buyers, including high net worth individuals, approached commercial property investments. During the financial crisis, the share of commercial properties owned by private buyers jumped from around 30 to 38%. That's a pretty substantial increase, especially when you consider the economic turmoil that has been happening at the time. And then, when the pandemic hit, we witnessed a similar trend. In the first year after COVID-19 struck, the share of the commercial property owned by private buyers, like the 1% Club, went from 39% all the way up to 45%. Now, you might be wondering, why would the wealthy double down on commercial real estate during times of such uncertainty? Well, here's the thing. When the economic outlook starts to look a little shaky, a lot of the big institutional investors and public funds tend to get spooked. They start pulling back, selling some of their assets, and trying to minimize their risk exposure. But the wealthy, they see that as an opportunity. With their deep pockets and access to equity, they're in a prime position to swoop in and scoop up some prime commercial properties at a discount, while everyone else is busy hitting the panic button. It's a bold strategy, but one that's paid off time and time again for the 1% Club. So what does that actually mean for the Australian market in 2024? Well, let me tell you, our little corner of the world is shaping up to be a pretty hot commodity for the 1% Club. Take Sydney, for example. According to the experts, that city is expected to be the front runner when it comes to prime rent growth next year, with projections at around 12% increases. Can you imagine? For the wealthy, that's like a license to print money. But it's not just the big cities that are catching their eyes. Believe it or not, some of the wilderness retreats in good old Tasmania are also on their radar. And it's not hard to see why. Prime property values along the Derwent River in Hobart have skyrocketed by a whopping 142% over the last decade. Now, I know what you might be thinking. Sure, the wealthy can afford to invest in fancy city properties and remote luxury retreats, but what about the rest of us? And it's a fair point. But here's the thing. The 1% Club isn't just focused on the glitz and glamour anymore. These days, a growing number of wealthy investors are putting a major emphasis on sustainability and reducing their carbon footprint. In fact, over 65% of them plan to make moves in that direction in 2024. And you know what that means. A whole new world of opportunities is opening up for sustainable development and eco-friendly investment properties. You know, as I was putting together all these insights on how the 1% Club approaches property investment, it really got me thinking about the bigger picture. Because at the end of the day, it isn't just about the wealthy elite. It's about all of us and the journey towards building wealth and financial freedom. Sure, the average person might not have millions to throw around like the ultra rich, but that doesn't mean we can't learn from their strategies and mindset. In fact, I'd argue that understanding how the wealthy think about real estate is one of the most valuable lessons we can take away. And that's why I'm so excited to keep this conversation going, because we've only scratched the surface when it comes to unpacking the world of property investment. So if you're like me and you're hungry to keep learning, do me a favor, hit that subscribe button and ring that notification bell. That way you'll be the first to know when I drop a new video diving into the latest trends and strategies in the property market.